Hi guys, time for another what if. Now, we are going to discuss Dropbox and Salesforce and Slack. And we're going to see what if Salesforce pick up Dropbox. Now, Dropbox is at $25 a share. I said $18 a share is worth picking up because of its cloud business is well undervalued, and even if it was just the cloud side, it's worth picking up for that alone. The money it has on its books is a very undervalued stock. I said as well as that, during the lockdown, I started getting on a weekly basis DocuSign documents, and then all of a sudden they changed to HelloSign documents, which is Dropbox e-sign business that they acquired the year before. Now, the thing is, DocuSign is number one, Dropbox is number two in the e-sign business. Salesforce has picked up Slack for $27 billion. Dropbox is $10 billion. Salesforce is also buying up shares in Dropbox and DocuSign. So that tells me that Salesforce is interested in an e-sign business. They have also picked up Twilio, shares in Twilio, and also in Snowflake. So they're also interested in cloud business as well. So I think Dropbox just fits it perfectly, and I think it would be a perfect acquisition for them. Now, even if they don't, Salesforce is at a great share. Salesforce is at a great price. I said at $220 it will be a good price, and look at it now. It came down because people thought they overpaid for Slack, but I think people don't understand the long-term basis of Slack. They agreed to pay $27 billion in cash and stock for Slack. Now, if you are the type of person who only wants to buy whole shares, Salesforce is saying I would keep long term. But if you're the only one who wants to hold it long term and buy whole shares, and you can't afford the $225, I get that. I'm not going to judge. The thing is, you can look at Slack. Now, the thing is, that has been going down as well. Now, it's under 25 billion, which means it's 2 billion. It's trading at 2 billion less than they're going to pay for it. Now, I expect that to go up, but you never can tell with a centre. The centre sell off, but we'll see what happens. Now, the thing is, you've got to think about, even if Dropbox doesn't get acquired, it will be an amazing company to hold at that price. I've always said anything under $25 is worth buying. Now, hi guys, little plug here. don't forget to hit that lovely like button and smash that sexy subscribe button. A lot sexier than me, trust me, ask the wife. Don't forget to comment in the box below. If you're looking for a free trading platform which to trade your stocks and shares, why not check out the links in the description below. Freetrade are doing a promotion at the moment where if you sign up before the end of the year, you'll be entered into a free draw for what they call a stock hamper, where you can earn a Shopify, a Nike and a load of other stocks. So why not? Doesn't cost anything, just click the link, deposit £100, £100 and start investing. Anyway, let's get back to the video. Now we move on to Facebook with What If, and I think Facebook is a great discount here. I think it's an amazing company, and it's under the spotlight, has to watch itself, it knows it's under the spotlight. The thing is, even if the government split it up, there's a lot of things that Facebook own, such as WhatsApp, Instagram, that it hasn't monetized, which it can. It would then have an excuse to monetize. It has actually touched the waters in the past where it's sent out little inklings, like I'm sure you've all had the WhatsApp messages and Facebook messages before. You need to do this, otherwise you'll be charged for Facebook, for WhatsApp or whatever. It was just to see whether how people would react. Now they would monetize it if they thought people would carry on using it the same, and if they split it up, they would then have to monetize it because there would be separate businesses, and that is going to be the pushback against the government. And I could see them doing that if split up, and they would be just as, in my opinion, there would be a bit of a sell-off, but I think having those businesses separate, monetized, would be just as good as having them together. However, obviously I'd rather have them all together, with Zuckerberg focusing on all of them together. But another one I spoke about before is Run Up. I spoke about it here. Unfortunately, I never got in myself. You know, I spoke about it when it was about 34. It ran up to 40 and then came back down, consolidated. Spirit Arrow Systems. Now this is a $40 to $50 stock all day long. Now it's still trading at a discount. They make the fuselages for the planes for Boeing, and they're less of a risk than Boeing. If you want an airplane maker stock to get into, this is one. Now, one way to look at it is, what if with everything going on, a rival company comes in for them? Would Boeing, who spun them off, let them go to a rival company? Would they be able to afford to go in for them? No. But even without, I think they got good growth. TPI composites. Nah. This is one of my best. This is one of my greatest moves, and well, not my greatest moves. It's one of the great moves and mistakes, because when Workhorse was at $30, I sold a chunk of it and moved into this company at $30. And then when Workhorse went down to 19, sold out of this at 40 and went into Workhorse again. Why? Because these make the bodies of the Workhorse truck. Now, since then, these have gone up, carried on going up. They also, but it's more of a hedged bet, because they make the blades for the wind farms. So even if they don't get the USPS contract, they'll still be fine. I think they'll do well going forward. Anyway, the question has to be, if Workhorse gets the USPS contract, would they spend $2 billion of it on buying up TPI composites, or would they just carry on outsourcing to them? I'd like to know your comments. I'll see you in the next video.